November has begun basically the same way most months have in the last couple of years, with the US markets firmly focused on the trade situation between Washington and Beijing. Things seem to be pointing in the right direction at the moment, so much so that the Dow Jones now finds itself at an all-time high of 27,500. It reached that thanks to positive comments over the weekend from Wilbur Ross. He's the US Commerce Secretary, so no, he's not involved with the negotiations with China. He's still high enough up in the government that what he says matters. Again, it was the kind of comments we've heard from a lot of US officials recently, saying that they're optimistic about phase one of this trade deal with China being signed soon, if not necessarily in November. The location for the signing is yet to be confirmed now that the APEC summit in Chile has fallen through. However, that doesn't seem to be too much of an issue, or at least Ross didn't make it out to seem too much of an issue. He also crucially said that the US government was preparing, I think, fairly soon to issue US firms with licenses to go back to selling components to Huawei, the phone company that was sort of one of the major victims of the escalation a few months ago between the US and China. You've also had then reports late on Monday that Trump might be considering rolling back tariffs on, I think, $112 billion worth of Chinese imports, which is a good old chunk of the Chinese goods that were hit back in September when the latest round of tariffs came into play. That's, I think, one of the key demands Beijing has put out there if they are to go forwards with this phase one agreement. And I think that, more than anything so far, would be a real indication that both sides are still, their relationship is improving. I think so far it's been a lot of optimism, not action, which means that the Dow's gains so far are perhaps based on rather rocky ground. If you just look at where the market, last time the Dow Jones hit all-time highs was back in July, and if you look at what happened sort of in the weeks and months afterwards, the Dow Jones didn't have a very fun time of it, largely because there were then further trade issues with the US and China. And those things seem to be moving in the right direction between those two countries. At the moment, the market doesn't have anything actually concrete to work with, meaning the Dow Jones could face a tough time of it protecting that all-time high in the coming weeks, especially if there are any flashes of doubt that this phase one deal might not go through, even if it's something as simple as a disagreement over where the deal is actually signed, be it in China or the US or a neutral territory. It's also going to be interesting in the next couple of weeks and months to see whether the impeachment proceedings against Donald Trump manifest in the market, whether that is something the market will increasingly get anxious over as we head into 2020. At the moment, that doesn't seem to have really been the case. The trade deal is the thing that the markets are firmly focused on. But as perhaps things heat up for Donald Trump, that could start to become an issue for the markets, be it the dollar or the Dow Jones and its US index peers.